The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks. And I'd like to start the show with the Dow Jones Industrial Average with the picture of the Bradley model over it. We are at a most incredibly important timing point here in the market. If you'll remember a few weeks ago, Basil was talking about the importance of 16,840. I wrote that down. I posted it here on my desk, and so far today, the high in the Dow has been 16,832, and that's right at the 61% retracement of the high, coming back from when we made it on July the 3rd. It's been a 7-day rally, so we're definitely in an overbought situation now on the short term. But what we'll do is we'll walk through some of these other things that we're looking at, and we'll see if we can find out where we are as far as looking at something that makes it technically very, very important, because I think many of these things are coming to such an important level that it's just very, very instrumental here to watch it, especially the Dow Jones, which is only 30 stocks, but the important is that that Bradley model is so important to what I look at for cycles. So we're right over either today or tomorrow is a Bradley date, so we'll see if that is going to be the case. But if we take a look at the broad market, the really New York Stock Exchange Index, this is the one that is the most important, and I will post this in so you can take a look at it, because we are just about spot on to the 61% retracement of the move. We're making a Gartley pattern here from the low from August the 4th. So we've had this 6-day rally. It's going right up to the 61% retracement. And what's important about this chart on the NYSE index on the 60-minute is that it's going into the gap. And if you'll notice it, take a look at this chart. If you go into Tiger TV, you'll see that you'll see the 61% retracement level that was broken, and then the market gapped down and had the big move down into August 4th. And now we went back into that gap, which happens to be the 61% retracement from the high of July the 3rd. So this is a very important spot where we are today. All it takes today, Dow's up 150, 160 points, but we get up over, say, 200 or so in the Dow. This probably means that we're probably going to be going higher. The NASDAQ has already made new highs, but remember that's those stocks are on steroids because they're cap weighted, and they have the biggest ones in that 100. So it really doesn't take much to get that thing moving. It's the market on steroids, as I've heard it called before, and it certainly is a really good, vivid description of what we're seeing here with the NASDAQ. It's been very, very strong. Now, I also wanted to bring up the cash S&P index, because here again, we're looking at some very important Fibonacci levels that we're looking at. Now, remember, this has nothing to do with fundamentals. This is all related to just the technical nature of the market based on pattern recognition, which part of this is Fibonacci ratios. And if you'll see this cash index, the break that we had between those 2 weeks in April, from the 1st of April down to the 15th, it was exactly equal to the low from the 2 weeks we had in August into August the 4th. Those were exactly equal correction. So this market still had a bullish bias. It stopped right at the 61% retracement and right at the 382 retracement, and now we're rallying back we're at the 786 retracement. Now, it doesn't take much from here, to push this market higher, and that would tell us it's going to go it was going to go even higher because it stopped exactly where it should have on August the 4th. We had a equal move, very similar to the last correction we had back in April, but we are at the moment of truth today as we're coming in here because many of these things are hitting the same numbers in different ratios. 61% on the New York Stock Exchange Index, 61% on the Dow Jones, 786 on the New York Stock Exchange Index, 786 on the S&P futures. They're actually about a point higher than the 786 retracement. So all of that is telling us that we're at such a critical level. However, if you just listen to the pundits on CNBC or Bloomberg, they're talking about, the explosive market in the NASDAQ, which is the one that is still going up, and it's been the strongest all along because it couldn't even make a 382 retracement from the April lows when the rest of the market was, pulling back to a 61% retracement. So this is why this NASDAQ is so important. It's been up 7 days in a row now, which makes it due for a correction, but whether it's going to correct or not, we'll have to wait and see. I don't have any numbers up here that look interesting as opposed to what we're seeing in the New York Stock Exchange Index and the NYSE, or of course the NYSE, the S&P, and the Dow Jones. All of those are at very critical levels. So that tells us that we're at a spot where I would call it an inflection point. It's either getting ready to turn down from this level, or it could be in one of those situations where we're just going to run up and make new highs again, which we certainly could because the market stopped exactly where it should have at that point. But we are such a critical level as I'm on the air. I mean, it really is. This is the spot where if you want to go short, you don't have to risk very much from here because it's at the proverbial moment of truth as we look at it. If we take a look at the VIX index, which I've always looked at this through the years, but since I've been listening to Basil's show, I've got a greater understanding of the VIX index. It seems to be one of the better technical things from a timing standpoint, and we are right at a 786 retracement in the VIX index. As a matter of fact, I'm surprised that it's not down more than it is today because of the fact that the market has been so strong. It's actually holding up relatively well. Given to the fact of where we were, on Friday. We just about made the exact 786 retracement on Friday. We missed it by a penny or two, and we haven't tested that yet, but it's still early. We certainly could. So we've got that looking at it. Remember, this thing moved 60% from July 3rd into August the 4th. So in 1 month, that index went from 16 to 17, and that's a big move. So I think that's the first indication that people are looking at, something that could be a little bit more dramatic happening in some of these stocks that we've been following. They will come down someday. Whether it'll be in my lifetime or not, I don't know. But we're at such a critical time now because if we're really strong this week, that's going to tell me that the Bradley model is just not working. And I'm not, I don't know why. I don't care why. If it's just not working, and you just don't use it. You work what works. You use what works, and if it doesn't work, go back to something else that works. That's the bottom line, and it's a very important where we are today. There's just no other way to explain it from my point of view. Looking at the technical part of where we are. In the market itself. Now, if we take a look at, the overall market, when we look at the New York Stock Exchange Index, which is, it's impossible to trade it because it's an index that I think it's posted every 10 minutes or so, but we're right at this 61% retracement. So all it would take to put a short position on would be for the market to reverse down. It wouldn't even have to make a new low on the day. If it just closes in the middle of the range, that would give you the signal that you could certainly sell it there and then put your stops above today's high because these stops would have been validated, or these Fibonacci points would have been validated by the highs that we made today. 786 in the S&P in the E-mini S&P, both 786. 618 in the Dow Jones, and 618 in the New York Stock Exchange Index. Now, that doesn't mean they're going to hold there, but right now they have been. And if they sell off from that level, then you would say, okay, now I can take I know what my risk is going to be from this spot, and so you don't have to risk much more than today's high should the turn start to occur sometime today. Whether that'll happen or not, I don't know. But all I know is the market's overbought. We've been up 7 days in a row. We're setting right at major Fibonacci resistance. The VIX is setting there at the same time. So all of that, it's telling us that we're at such a critical level of where we are. One of our listeners has asked me a question about the Bradley model. And the Bradley model is a purely cycle model. It's weighted on the various planets. Each planet is either positive or negative. These were values that were determined by Dr. Barr at Princeton University way back in the 1930s. He was a astrophysicist, and they know what the valence or the electronic power is on these particular planets based on what their orbits are, and they're either positive or negative. And so what Bradley did was he gave them a weighting of positive or negative, and when a positive and a negative would come together, they would give a certain weight, and from that he could draw a graph on what should happen to the stock market. Well, he only wrote one pamphlet of 50 pages. It was a pamphlet. It wasn't even a book. But he sold it for $4 in 1947. That was a lot of money in 1947. And so not many books were sold. It wasn't very popular until, in the mid-'80s when Dr. Miller and Jim Twentyman and I did a lot of work on the Bradley model, and I wrote articles about it, and then I wrote a book, Astrocycles, A Trader's Viewpoint, where I discussed it and showed that it does have, really strong probabilities of predicting the market. And we went back and tested it for 135 years. That was 30 years ago, so now we're 165 years into it. So we got a really good sample size, and we know that it works around 75% of the time. The problem is the other 30%, because when it doesn't work, it either inverts or it just doesn't work at all. The Bradley dates themselves are pretty good, and we have one due tomorrow, I believe. And so it's going to be, it's an interesting model to look at. And boy, sometimes when it works, it's just spot on. It's been pretty good since July the 3rd. And now we're coming into this rally here, if this is in fact what it is, and it should start down either today or tomorrow. That's what the model is saying it should do. But whether it does that or not is another theory altogether. We'll have just to wait and see. You don't want to tie it up. Don't put all your expectations into the Bradley model. All of our frustrations in trading and in life and with our kids and spouses, whatever, all of our frustrations come from expectations that were not fulfilled. And that's really an important concept, to keep in mind. After the break, I'll give you a perfect example. I've got the Dow up about over 150 and gold down $1.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. we've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we were talking about the probabilities related to the Bradley model and the fact that you shouldn't, get your expectations too high on anything, because those where your frustrations, really occur. I have an interesting story to tell you that happened to me over the weekend. Every August at our large casino up in Scottsdale, Arizona, they have the Arizona State Poker Championship. And it brings in people from all over the country, in fact, all over the world, and there's thousands of them that come there. And during the month of June, July, and August, they have small satellite tournaments where you buy in for $100, and if you win that little tournament, you get your $1,100 buy-in to the big tournament. Well, I played in a few satellites, 3 of them, as a matter of fact, so for my $300, I had my shot at the prize pool. It was almost $2 million. And we started playing Friday, Saturday, and Sunday. And I'm down to the last 285 players in the tournament, and we were playing against some of the greatest poker players in the world. Phil Hellmuth was there, Daniel Negreanu, Kathy Liebert. I mean, there were just a lot of celebrities there. They had cameras, and, the news people were there. And as luck would have it, I'm the chip leader with 285 people to go. We've already gone through over 1,600 players, and I'm setting with a chip lead of about $300,000, and that is a huge amount because the average chip holder had about $40,000. I hadn't played a bad hand. I had never been behind on a hand. I was playing as good as I could play, and I had 3 perfect hands all in a row. And believe it or not, I lost on those 3 hands. The odds of me losing on 3 hands in a row like that is in the thousands and thousands to 1, but it was very, very frustrating for me. I took it with a my insides were burning, but I walked out and shaking my head, and because I really thought that this was my moment to shine in the sun, because it was first place was about $350,000, which I would have shared with everybody at Tiger TV. But anyway, it was really interesting, and I get into the car to drive home, and I was really frustrated because I really thought I had a chance to make some really big money, but and I do it for fun because poker is not gambling. It's related to probabilities, and you can bet when you want to and not when you have to. And it was just very frustrating to have 3 perfect hands and to get beat 3 in a row like that. So anyway, I get back in the car and I get a telephone call from an old friend from back in my high school days who we keep in touch with, went to college together, and he's having a great deal of difficulty. And we chatted with him and his wife and stuff, and it was really sad to hear that. And then I'm on the freeway driving from Scottsdale to Tucson, which is about an hour and 40 minutes, and I'm not 30 minutes into the drive, and I get another call, and it's from another good friend of mine telling me it was his wife, and telling me that he had passed away. He was one of my best buddies in high school. We used to sit on the roof of our little house in Terre Haute, Indiana, back in 1954, and listen to Elvis Presley sing out of Louisville, WLS out of Louisville, Kentucky, and singing Heartbreak Hotel and Blue Suede Shoes. And it was just good memories. Boy, it was really a really emotional day on me yesterday, but made it through okay. I'm still above ground. I don't walk near open graves, so I'm okay. Anyway, getting back to the market is just don't tie your expectations up in the Bradley model, folks. It might work, it might not, but we'll see if what it is. Excuse me, that WLS was in Chicago. That's correct. I was thinking of the radio station in Louisville. It's not WLS, but it's really close to that. And I'll think of it in a minute, or maybe I won't. I'll look it up later. But that was the station we listened to because that was where they did Hillbilly Rock, and it was early rockabilly and stuff with Bill Haley and people like that. But we like the rhythm and blues things from Bo Diddley and Larry Williams, and not the Larry Williams in trading, but the other Larry Williams. And it was really good times. But anyway, he passed away, and it was a little sad, but that's the way life goes. Fortunately, I've been really, really fortunate in my life with health-wise up until the last 18 months or so, but I'm still above ground. And I love this business that I do. I mean, I really enjoy the trading part. I enjoy working with the folks that I work with at TFNN and, everybody, but it's been, it's really kept me, moving. I really enjoy it. It's my best hobby, and fortunately, it's something that I enjoy doing. At least I don't have to, be retired and go out tinkering in a garage, because I wouldn't know how to tinker in a garage because I don't do any of that stuff. Well, I've wasted enough time on this segment. We have to take a break now. I'll get back to business at the break, folks. Dow's still up quite a bit.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we're going to talk here a little bit about the notes and bonds. As you can see, they have reached the 61% retracement in the bonds, going back to the high we made a year and a half ago. The notes have rallied up to the 786 retracement. That's not a year and a half ago. That was off of the recent high. I'm sorry, there's 3 lower highs in there. It's down quite a bit from the highs we made at the 155, 160 level in the bonds. We're up to we got up to 141 on that last run here last week when we had that little flight to quality. And so they're due to start to back off. In other words, start to see higher interest rates from this level. Whether that's going to occur, again, is a matter of probability. So we'll have to see what happens. But this is a spot where it should turn down from, because we've completed the ABCD patterns, which are Gartley's, and they're coming in at the 61% retracement on the bond. So it makes it a really beautiful picture, because the high for the fib number was at 141.12, and it got to 141.24. So that was within $300 of a contract that's worth $140,000. So it hit it spot on as near as we can see. But remember, the high that we made on this was done way back in July of 2012, up at the 154 level. Then we had 3 lower tops from that level, and this is the 4th lower top that we're having now. And it's actually the first really clear Gartley that we have on this from a long-term daily standpoint. We've had some shorter-term ones that work for 2 or 3 weeks, but from a longer-term perspective, this is the first time we've had one of these. Now, we're at the 61% retracement of the high from April of 2013, but we're also at the 50% retracement of the high from July of 2012. So we have about 4 different numbers coming together here in this 141 level that tells us that this should be a really strong area of where the market should go. Now, one of our listeners here at Tiger TV has asked me, well, isn't there a relationship between stocks and bonds? Not really, because if you overlay the price of stocks over the price of bonds, you're going to see, a totally different picture. If you look what happened in bonds during 2012 to 2014, they were straight down and stocks were straight up. So, that relationship did not work during that time. But then again, everything's a probability. So that's what you have to do, is to assume what the risk is going to be on the trade that you have to put on. So that's the real key to trading, is risk control, because we don't know what's going to happen next. There's no question about that. The only thing we can focus on is how much we have to risk when we're putting something on. But we are at the moment of truth in the bonds, and of course they're having the big meeting up in Jackson Hole, Wyoming, I guess, where all the talking heads get together to determine how our future is going to unfold over these next few months. So we'll wait and see. The question is, how much are they going to stimulate the stock market? Remains to be seen. So we'll have to just be patient to see, what happens, with that. I wanted to mention something about the gold and silver market here, because silver has broken down below its key support. We started doing that last Thursday on the commodity show. We held there for just a few hours, and then the market really started to back off. And if we can, if gold gets much below $12.90 per ounce, it's going to have some very, very long-term targets that are going to come in at a far, far lower price than where we are right now. They come in almost $100 per ounce lower if we break below that 1285 level. And the reason for that is all the rallies have been very, very weak ever since we topped at the 1490 level. Then we topped again at 1335, and then again at 1315, and now each of these tops are lower, and then the market keeps breaking down, and that's telling us there's a great deal of selling pressure coming into the market at that time. So we want to watch that to keep a close eye on gold, because even though it looks like it could be friendly, it doesn't necessarily mean that it's going to go up. If we take a look at the XAU, which we always try to watch because it's a good indicator, because it's the gold and silver stocks, it's been acting very well. It's held up incredibly well during the sell-off that we had into August the 4th. It just completed a 382 retracement at that time, and it's still acting, really, really bullish from that point of view. I'll get this up here in just a second once I learn to walk and chew gum at the same time. And you'll notice that it's held above the 382 all during June, July, and August, and it still has a chance to break out to the upside. But again, if it starts to fail and gets below that level of around 96, 9650, 9700, not 9,700, 96.50 and 97.00. If it gets below that in the XAU, then you'd be talking about something different, that the market actually failed that level, and now it's proceeding to head down. We still have lower tops in this gold-silver index ever since last August. We had another lower top in March, another lower top in July, and so far another lower top here in August. So that's one of the negative indicators possibly looking at this. But it's flat-out bearish in silver, folks. I look at that silver chart, and it looks to me like it's got a real chance to drop $2 an ounce from here down to around the 1,700 level, which is the long-term 786 retracement from the high we made in April of several years ago when we hit 49.50 per ounce. So that's a very interesting situation that we have going on in both gold and silver. There's very little flight to quality in gold anymore. When the Ukrainian thing happens, you know, the gold rallies $15, and if you wait 2 hours, it's usually trading back down to where it was before the results. What I thought was the most interesting thing is when I was in the tournament, they have TVs all over the place, and they had one of them had a news channel, and I was noticing that Putin was riding a horseback with his shirt off, and it was you could see it was a promotional film of what he was doing on his vacation. But boy, oh boy, I just couldn't believe that here is a prime minister. Nothing wrong with taking his shirt off, but when you're close to 60 years of age, I mean, you know, you really have to have a lot of confidence to take your shirt off and ride horseback. Well, neither here nor there. I do like riding horses when I was younger, but I'm surely not going to take my shirt off. First of all, I probably couldn't put it back on by myself. But anyway, neither here nor there. I just think Putin is someone who can't be trusted. He is a ex-KGB, and he's going to do whatever he wants to, and he knows that nobody's going to do anything about it except for sanctions. And I don't think the sanctions will work as much as if we could get the price of crude oil down to about $70 a barrel, and that would mean that I think it's $90 a barrel is the break-even point, is what they tell us on what Russia needs to break even on their oil income, which is I think about 60% of their GDP. So if that would drop, then you have real problems in Russia, and he wouldn't be able to stand the onslaught of that. The sanctions are such that I don't know how much they're going to be enforced. I mean, we saw this with the Iranian conflict and Mark Rich back in the 1980s with Jimmy Carter. You know, it really didn't do anything at all. So why they work, I guess it's far better than going to war. That much I'm sure of. But as the rest of it is, as far as working, I'm not sure whether that's going to work very much at all. I wanted to mention about the U.S. dollar index. I posted that chart into Tiger TV earlier, and I want to put it in again because it's so important where we are here in the U.S. dollar. This is so I trade the currencies really a lot, and this dollar index is completing the ABCD level now. It's been here for a week at this 8180 level. The thing is, because this index is 53% weighted to the euro, if the euro gets much below 133, this dollar index could take off and accelerate, and we know that that CD leg doesn't necessarily have to be equal. It could be 1.27 or 1.618 or 2, or some really ridiculous amount, because this thing, if it gets above 82, easily can go to the 83.50 level, which is the 786 retracement of the high we made last year. And that would put the euro, way below the 130 level and probably heading towards the 127 level. And that means the pound would be giving up its, chance to go higher too. So these are both of those currencies, the euro at the 133 level, the pound at 166 are very, very important from a technical standpoint. Boy, when you talk a long time, you end up getting a dry throat, and you forget to take a drink of water, and then you get in trouble. Someone asked a comparison about Putin and Obama. I don't compare politicians, folks. I don't know diddly squat about politics. The only thing I remember about politics is when I first voted at 18 in it's the 1960 election with Kennedy and Nixon. My dad was a member of the Daily Democratic stuff, and he said, go in there and pull that lever 7 times for Kennedy. And I said, you're only supposed to vote once. He said, that's for everybody else. We vote 7 times in this county. Well, I went in and I pulled it 7 times for Nixon because I didn't think it was fair. But anyway, that's a true story, and I'm sure it's like that other places too. But unfortunately, it spoiled my view of politics, which I've kept pretty much to myself all these years. So I don't really watch it very much. Okay, someone has asked me about the stock market. I tried to explain to you the importance of today's day because of all the numbers that we're setting at right now. I've been on this show talking for an hour, and nothing's changed. These are still right at the same numbers. They're right at the 618 at 16,840 is still the important number in the Dow Jones. And that's where we broke down from. It's into the gap area. The same thing with the New York Stock Exchange Index. The VIX Index is setting at the 786. We've got a Bradley date tomorrow. So this is going to be an interesting week. We're up 7 days, which means the market's overbought no matter what. But that doesn't mean it can't go up 8 days, 9 days, 13 days. We know that just from past experience. This dollar index is an important component of what happens to money, and it's telling you the dollar is strengthening here. It's actually holding up relatively well, given all this stuff. So keep in mind that just because these numbers are there doesn't mean that they have to, that they're going to work all the time, because it's only probabilities, folks. That's all you're dealing with. It's always probabilities. Nothing more, nothing less. Someone's asked me a question about Tesla. That is it going to be a $400 stock? Folks, I'm not sure it's even going to be a $268 stock. All I can tell you is that it has a potential, because we're up in this area where we talked about it before. We hit that double top again yesterday at the 265 level. We still have a potential at that level. I'll put the chart for Tesla up here to take a look at it, but we haven't gone. This is a $262 stock, and the most it could do today was 267. That's 0.5%. So it's doing very, very, very little, and it's in the lower part of the range right now. It's back to where it was, 4 days ago. So this has a potential for a double top, similar to the one that we made back in February at the 265 level. This is an area, if you're interested in, buying a put, this would be the place to look at it, because the market's been up for a month. It's been incredibly overbought, and so this would be an area where if you wanted to sell it, you could, sell it here, risking $10. That would be roughly 3.5%, or buy a put, and you would have to put a long expiration on the put. I would say about a month, and keep it one strike out, and it would be a relatively low-risk trade if this is, in fact, going to be a double top. The key is to wait till tomorrow, because tomorrow's the Bradley date. If the market's lower tomorrow than where it is today, you just circle today's high, and that'll give you an idea of where you think the market should have topped right at that time, because we're right over all of those major spots. I mean, they're just one right after another. So many numbers coming together, at that same time, and that's what's so interesting. And here we are on the air, and been on for an hour, and jawboning pretty much, and the market's gone, nowhere yet. But we're right at that number. There's no question about it. So we'll see. Okay, we got to take a little break here to pay some bills, and we'll be back in a few minutes with the Dow up 160.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and we've had a request to talk about December corn a little bit. I posted into Tiger TV the chart for December corn going over the past 3 weeks, and we posted this on the Commodity Show last week that we're making a 3-drive to a bottom pattern there. The corn rallied 20 cents a bushel. Today's high was an exact 61% retracement of the previous 3-day rally that we had back in late July. And so the market is mildly overbought from where we are right now. So we have to watch the retracement here in corn to see what it's going to do. The second request that I've had is to talk a little bit about crude oil. I mentioned it earlier in the show about Russia, the fact that the crude oil has a the $90 a barrel is the break-even point for Russia in selling their crude. And as you can see here on the crude oil chart, we're completing a Gartley pattern at the 786 down here at $95 a barrel. We're trading at $95.93 right now, so kind of keep an eye on it at that $95 a barrel, because that should work, because we have an ABCD pattern coming in at a 786. That's a perfect definition of the Gartley. If you look at time and price in the AB leg and in the CD leg, those are very, very similar. So you have a lot of symmetry coming in here at $95 a barrel in crude. I'm sure by the time we come into Thursday on our commodity show that we'll have a better idea if in fact that it'll hold. Now, if it breaks below that, that's most telling us it's going to be heading down, sharply lower, and possibly to the 1.27, which would take it down to about $85 a barrel. And then you're getting a little closer to, putting the squeeze on Chairman Putin, because of the fact that, I don't know if he's a chairman or a premier, I don't know, well, whatever he is, El Premier, whatever, El General, whatever it happens to be. We'll see if that's going to be the case. I have an interesting story to tell you. This is really funny about politics in Mexico. My good friend from the University of Arizona is a retired professor. We very good buddies. He and his wife and family go to Los Mochis every year and stay in the Alamos, Mexico, which is in the Sierra Nevada in the silver mining area. And they had a brand new car, a Toyota and SUV, and they had it there 3 days, and it was stolen. And they went into the police police captain to report the car had been stolen. And the policeman said, "You're a rich American. Go back and buy a new one." And that was it. That was the extent of the examination. And of course, it's not covered by insurance, so he had to buy a new one when he came back. He can afford it, but the fact of the politics involved is really amazing. We don't have many people rushing from the U.S. into the Mexican border, but we sure have a lot of people here from the Tucson area. We see a great deal of people coming from Mexico into the United States looking for a better life, which it's certainly better than what they have, down there. But that's this has been my political show, folks. I'll try not to bring this up anymore, but it's been an emotional couple days for me, and I'm struggling through this. And also, we're at a real critical level in the stock market, so we're going to be watching it really, really closely here today. But this is really important. That should have been, something that I probably should have kept to myself about the car. But I thought it was rather funny. It wasn't funny to him, but it was funny to me. So we're watching the stock market today. Very important. Bradley date tomorrow, 7 days up, 786 retracements in the S&P. And in the S&P futures, we're at the 61% retracement in the Dow Jones. And live every day in an attitude of gratitude, and may God bless, and do something nice for someone a lot less fortunate than you today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.